So let's look at inventories today. Inventory are products being held prior to sale, of course. And why is inventory valuation important? If you remember when we were talking about some frauds and all, we spoke about multiple things. One of the things that we spoke of when discussing LIFO, FIFO, etc. was how you value impacts both the cost of goods sold and the value of inventory. How you value impacts both the cost of goods sold and the value of inventory. The cost of goods sold enters the profit and loss account, while the value of inventory enters the balance sheet. Do you remember what we said last time? So, just to summarize what we said last time, I will just write it down here. Do you remember we said jug 1, we spoke of, we solved a problem also, but to remind you of the basic concept, we spoke about jug 1 which was bought at 10 rupees, and then we spoke of jug 2 which was bought at 20 rupees, right? And then we said that FIFO and we spoke of this jug, right? This jug. We said we have bought 2 jugs. One jug at 10 rupees, the second jug at 20 rupees. How will we value it under FIFO? And how many jugs did we sell out of 2? We sold 1 jug. So, under FIFO, this 10 rupees, first in, first out was sold. First in, first out. So, the cost of goods sold is 10 rupees. But this 20 is still with us. First in, first out. So, the last one is still with us, while inventory is 20. Under LIFO, the case is reverse, for last in, first out. So, this 20 rupees is our cost of goods sold and inventory is 10 rupees, this one, last in, first out. Under weighted average, we take the average 15, right? One is sold, one is with us. So, inventory is 15 and cost of goods sold is also 15. When the cost of goods sold is low, 10 versus 20 versus 15, right? Then the profit is high. And when the inventory is 20, so we have more assets in the balance sheet. So the balance sheet is strong. For LIFO, what's the scene? For LIFO we have cost of goods sold is 20. So the profit is low. You see that? Because the cost is high, so the profit is low. And asset is valued at 10 rupee, here it was 20, so the balance sheet here is weak. Balance sheet is weak. right? And for weighted average, these are equal. So it's somewhere in the middle. You see that? It's a middle situation, middle, both in terms of cost of goods sold. So middle situation. So profit is also in the middle, right? Are you getting it? This is for everything is in the middle, right? So everything is like profit is also in the middle, balance sheet is also neither strong nor weak, etc. This is the essence of what we had discussed, and this is why the valuation of inventory matters. Why? Because how you value inventory affects cost of goods sold, so that will impact your profit and loss account, and then it also affects your balance sheet, right? So what is the essence of inventory valuation? We will see it in greater detail, but the essence of inventory valuation is we will value inventory at lower of cost or market. So cost or market price, whichever is less. And why do we do that? Accountants are conservative people. Accountants are conservative people. I bought this jug at, let us say, I just come back to one thing. I have this glass now, yeah? I bought this glass at 10 rupees. The market price of the glass falls to 8 rupees. Should I value my glass inventory at 10 rupees or 8 rupees? 8 rupees. Why? Because inventory should be valued at lower of cost or market price. Lower of cost or market price. And if the market price goes up to 12, cost is 10, should I value it at 12 or 8? 10, right? So that's the point, that we don't value it at a higher or lower market price, we value it at cost, right? If the market price is high. So overall we value it at lower of cost or market. And what was the conservative principle of accounting, do you remember?
We should always make the provisions for the losses, not for the profit.
Yes, yes. So, yeah, more or less, right? Yeah. Who said recognize all losses? Yeah.
When we receive it, recognize cost, then it incur.
Conservative principle basically was we will, all of you are partially correct, but the essence of what was the essence of conservative principle? Recognize all expenses and losses as soon as possible, but when it comes to incomes and gains, we will recognize them only when we are 100% sure कि हाँ हो रहा है, right? So when it comes to expenses and losses, we will recognize it as soon as possible, but when it comes to incomes and gains, we will recognize when we are 100% certain, right? And so this clearly is a conservative way कि the moment the market price is low, it is a potential loss, so we recognize it immediately. But when the market price is high, this is not an actual gain, this is an unrealized gain. Do you see that? When the market price is high, this is not an actual gain, this is an unrealized gain, and therefore an unrealized gain should not be accounted for. But a potential loss from 10 to 8 should still be accounted for, but a potential gain is not to be accounted. Okay. Yeah. So what is the market value? We will see there is a very mild difference between US GAAP and IFRS, which we will see in one of the later slides today. But the essence of valuation of inventory is following the conservative principle, we will value it at lower of cost or market. Next. Yeah. So the other aspect, we have already looked at the valuation methods, which was FIFO, LIFO, weighted average. By the way, the fourth was specific identification method, right? You remember that specific identification method? So under specific identification method, what we would have done? The jug that was actually sold would be specifically identified that okay, the selling price is say 21 rupees. So if the jug that was sold was of the first jug, then we will say the selling price was 21, the cost was 10, and therefore the profit is 11, 21 minus 10. But if the second jug was sold, specifically we will identify, then we will say selling price is 21, cost is 20, profit is 1. Got it? So that's the essence. Yeah. So perpetual, so there are two methods of inventory systems or two inventory systems. One is a perpetual inventory system, second is a periodic inventory system. For all of you who have done your BCom or BBA, in India we almost always teach the periodic inventory system. So that's what you have learnt in your BCom or BBA, right? So the name itself suggests what the inventory system is. When we say periodic system, it means inventory is being ascertained periodically, the closing balance. The cost of goods sold is being ascertained periodically at the end of the accounting period, which can be 1 month, 3 months, 6 months, 9 months, 12 months, whatever. In a perpetual system, as the name indicates, inventory is being monitored on a perpetual basis. So at any point of time, you would know what is the closing balance of inventory and what is the cost of goods sold, right? Laptops are not needed at this stage. You will need laptops after. You can use it. I know. But you will need laptops after 10-15 minutes. We don't need it today in the class. So all laptops can go down. So, but what you don't know is in the other class, when I had sought the informal feedback after 10 sessions, in the middle of every class I always do that. So in the other class they had requested that we want to solve some problems in the classroom. So in addition to the assignments, some problem should be solved inside the classroom. So we will also just do a little bit today. This was the feedback. I don't remember getting it from your section, but you also gave, yeah? Achha. But I remember section C gave. So I said, fine, since you want to work both inside the classroom and outside the classroom, what objection can I have, right? So you will do both, yeah? Assignment I will give tomorrow, don't worry about it. Don't think he is strict to assignment in India. So don't feel sad, eh? So, क्या हुआ? हाँ. So coming back, so what is a perpetual system? First we will do some theory and then we will do a written example where you actually get to learn something. So it's a continuous record of inventories on hand and cost of goods sold. How does it help the manager? Because if you get a continuous, if you know right now that my cost of goods sold is 100, then you can determine the selling price. I know my cost of goods sold is 100 and if I have to sell at 110, ठीक है निकालो यार. Similarly, so it helps to control the inventory levels, it helps to prepare the interim financial statements, and it helps in pricing and ordering, right? Because if I know right now my cost of goods sold is 100, then if I get a bulk order saying can you sell everything to me at 105, I'll say yeah, ठीक है जाने दो, I can always buy more. इसको तो let me sell the entire unit, 5 rupees of profit मिल ही रहा है, right? Are you getting what I am saying? So it will help in a pricing decision. Next, under a perpetual system, the count is always known, always at that point in time. As in, at any point in time, you know what is the count of inventory. So identifying, counting and assigning a specific cost to all items in inventories. It helps remove damaged and obsolete goods from inventory. It helps in identifying shrinkage, the loss of inventory from theft. This you will know when you do a physical count. The accounting records will anyway show the count, but when an auditor comes, let us say you are showing you have 100 glasses as per your inventory records, you have 100 glasses lying with you. But when you actually do a year-end check, when the auditor comes and sees, you realize it is 99 glasses. तो एक ग्लास कहाँ गया, right? So it may be one glass was broken and thrown away. It may be one glass was stolen. Somebody quietly took one glass away. So various possibilities exist. It can be theft, breakage, or some other form of loss. Next. So what's the perpetual inventory system? What we have done in transaction analysis, we have almost always followed the perpetual inventory system. What you have learnt in BCom and BBA, most of you would have learnt the periodic inventory system. ठीक है ना? So on days 1 and 2 when we spoke of inventory, this is what we did. When we purchase, we increase the inventory, asset goes up, and increase accounts payable, liability goes up. I am assuming credit purchase, right? If you otherwise, if it was cash purchase, then inventory goes up and cash goes down, right? Similarly, at the point of sale, asset, either cash or account receivable goes up, and sales revenue increases your stockholders' equity. This is what we learned on days 1 and 2. And at the same time, the moment we sell, we sold goods at 100 rupees, but the actual cost to us was how much? 80 rupees. So here we will show 100 rupees, and immediately we will account for the cost of goods sold of 80 rupees. So that will reflect the fact that cost of the net effect is 100 minus 80 is actually reflecting the profit on sale. And here we had anyways inventory, so inventory worth costing 80 rupees is sold, so we have to reduce it from the value of the inventory. And so we have done this methodology in days 1, 2 and in subsequent transaction analysis, and so that is the methodology of the perpetual inventory system, right? So then we have periodic, next. So what are the journal entries for perpetual inventory system? When inventory is purchased, we saw that inventory account is debited, accounts payable is credited or cash is credited. When inventory is sold, account receivable is debited, sales revenue is credited, and immediately that was for 100 rupees, and for the cost was 80 rupees, cost of goods sold 80, inventory 80, right? So this was our perpetual system of accounting. Next. Periodic inventory is a bit different from the perpetual inventory. Periodic inventory computes cost of goods sold and an updated inventory balance. So under periodic inventory, what we do is we compute cost of goods sold and inventory not on every transaction to transaction basis. We do it based on accounting period. वहाँ पर in the previous case we sold 1 lakh, we recorded the cost of goods sold 80,000, net profit 20. Here we are not doing that. Here you are following what you have learnt in your BCom and BBA. What did you learn in your BCom and BBA? In your BCom and BBA you were told opening stock plus purchase minus closing stock is your cost of goods sold, right? Opening stock plus purchase minus closing stock is your cost of goods sold. If you don't have a BCom and BBA background, and if it is not making intuitive sense, then let me explain it in terms of units, then you understand it much better. I'll give you a few examples. We started a business. What is the opening stock? Zero. We have just started the business. कुछ भी नहीं है. So opening stock is 0. During the year, think of it not in terms of amount, think of it in terms of units. It will make intuitive sense. We started a business, opening stock is 0. We purchased 10 units during the year. If 1 unit is still lying with us, how many units did we sell? 9. Right? Alternatively, if we sold 9 units, how many units are lying with us? 1. You get it? So it's like that beginning inventory को एक बार भूल जाओ. You purchase 10 units, If 1 unit is lying with you, that means you sold 9 units. Alternatively, you purchased 10 units. If you sold 9 units, then 1 unit is lying with you. So as long as you have one of the two, you can calculate the other. Are you getting it? You bought 10 units, there was no opening stock, you sold 9. So 1 is lying with you. Alternatively, if you are told you bought 10 units and only 1 is lying with you, that means 9 were sold. So are you seeing it? Forget this part. Purchase minus ending inventory is cost of goods sold. Go to the next year. At the beginning of the year, the closing stock of 31st of March is the opening stock of 1st of April. The closing stock of 31st of March is the opening stock of 1st of April. The ending inventory of previous period is the opening stock of the current period, right? So next year, what is your opening stock? 1 unit. Again you bought 10 units. So how many were available for sale? 1 of previous and 10 of this year. So 1 plus 10, 11 is available for sale. How many, let us say how many did you sell? Let us say you sold all 11 and you closed the business. So opening stock of 1 plus purchase of 10, 11, you close the business after selling everything, so ending inventory is 0. Is how many did you sell? Opening stock of 1, 10 you purchased, you sold how many? 11. Are you all clear? So this is making it clear that why opening stock plus purchase minus closing stock is your cost of goods sold. If you see it in, so what I just explained in terms of units, if you think about it in terms of cost, what if the cost is 1 rupee per unit? Then unit and cost is same, 1 rupee per unit. Got it? आप कुछ भी change करते रहो. So unit and cost are the same and therefore it will be. You have understood it? Perfect. Next. So what are the journal entries to be passed under the periodic system? So this is what you are used to. All our BCom and BBA friends are used to this since your BCom 11-12 days, right? So when you purchase something, what do? You say purchase account is debited and either cash or accounts payable is credited. When you sell something, what do? Accounts receivable or cash, depending on cash or credit sale, is debited and sales revenue is credited. And then what do you do at the end of the accounting period? At the end of the accounting period, look at this. What we just saw in the previous slide was opening stock plus purchase minus closing stock is cost of goods sold. So opening stock plus purchase minus closing stock represents the cost of goods sold. Are you seeing it? So cost of goods sold debit, purchase and inventory opening stock is credited. Finally, closing stock is debited and cost of goods sold is credited. Are you seeing that? So, and why is it making sense? The same thing. Opening stock plus purchase minus closing stock represents the net cost of goods sold. Right? Next. So what is sum of goods, cost of goods available for sale? That makes intuitive sense. Opening inventory plus purchases during the period. How much was available for sale during the second year? 1 unit of opening stock, 10 units purchased during the year. So you could have sold 11 units. Whether you sold 1, 2, 3, 4, 5 is a separate matter. The cost of goods available for sale was 1 unit of opening stock and 10 units of purchases. Next. So what is the theoretical difference between periodic versus perpetual? Count occurs. In periodic, you don't count it daily. Count occurs at the end of the accounting period to determine the amount of inventory and for calculating the cost of goods sold, right? But in perpetual system, count occurs during the year and why are we doing count during there? To check accuracy of record. Because our record is saying I have 100 glasses. What if I only have 99 or 98? So accounting record is still correct, but that difference of 1 or 2 is normal. For example, if you are having some liquid, say तेल था, थोड़ा सा when you are selling the oil, थोड़ा सा spill हो गया, right? When you might have seen when you are selling milk, let us say, open, थोड़ा सा spill हो जाता है, right? So even though you bought 100 liters, you are only able to sell 99 liters because everyone says yeah थोड़ा तो और दो, right? So here you are checking accuracy of record on a regular basis. Here you are doing everything at the end of the accounting period. So if the accounting period is 1 year, तब तो last year end में ही मालूम पड़ेगा. But here you know every time. This is my inventory, this is my cost of goods sold, and it will help in your pricing decision. There you will not know on an instant basis, and that's the reason it's called perpetual, because it's a continuous system, and that's the reason it's called periodic, because it's ad hoc at the end of the period. Right? Next. Physical inventory count is of course a time consuming process. If there are only 100 glasses, कोई problem नहीं है. Right? If there are only 100 glasses, it will take half an hour to count 100 glasses. But for companies with huge factories, lakhs and lakhs of products, like एक चीज, 10,000 types of products, and every product, we are talking of big companies. Then physical inventory checking is a very tedious and a continuous process that takes days and weeks, because even if you were to check samples, I am very happy. प्रतीक का +1 करो यार, ये बहुत अच्छा बात कर रहे हैं आज सुबह से, ठीक है ना? So what did you do wrong last time? कुछ गड़बड़ किए थे ना? क्या किया था? फोन बजा था, वो +1 कैंसिल करो. हाँ, फोन बजा था वो नेगेटिव जो किया था प्रतीक का, वो जो +5 किया था वो कैंसिल कर दो. हाँ, who? Not pharma, everyone has to check. Every company has to check. Why only pharma? If you think of it, it's important for everyone. Because see, as I already explained, it impacts both ways. Cost of goods sold में भी impact करता है, balance sheet में भी impact करता है. Cost of goods sold is sitting in your profit and loss account. So everyone has to basically check that the inventories, and how do you maintain internal control otherwise? So it's not an accounting topic, but how do you maintain internal control? Go to a factory. How many have visited a factory? Yeah. If you have visited a factory, have you seen workers leaving the factory? And have you seen that there are security guards who manually check कि कुछ देखे तो नहीं जा रहा है? Because, huh?
Well, coming inside, if you go to the market, then the husband will check us.
Huh?
Yeah. Checking for everything. Even in bus, car, everything.
So? They will check you. I was. अच्छा. क्या यार इतनी भी क्या बुरी है? Who were you hinting at? अच्छा himself. Okay, coming back. देखो, निविका खुद की शक्ल चेक करने लगी फोन में कि मेरी शक्ल तो ठीक है. So, but in a factory, and why are they doing it? कि कुछ गड़बड़ तो नहीं हो रहा है. Are people taking things out of the factory? All these things are important, right? Because अगर एक वर्कर डेली अगर 50-50 रुपए का सामान लेके चला गया, very soon the company will become bankrupt. And nothing against any worker per se, but the point was, if there is no adequate internal control, if there is no physical checking, then some people may resort to stealing your things. That's the reason you have for your inventories those sensors. Go to any shop, a modern shop, retail shop, they will have these sensors. So if you are carrying something by mistake which is tagged and not, you don't pay for it, so you got untagged when you paid, then the sensor will beep and you will be caught carrying, right? So this is what physical inventory count is needed to ensure that the value of inventory recorded in books is correct. Next.